Again, at the time of closing, at the time of departure, AD banks are allowed to convert the balance in the account for payment to the account holder at the time of departure from India into foreign currency, provided the account has been maintained for a period not exceeding 6 months, because then the tourist visa also expires. If the account has been maintained for more than 6 months, then the authorized will be able to seek the permission of RBI. Now, let us look at the provisions with regard to foreign nationals resident in India. Now, foreign nationals who are resident in India can open and maintain a resident rupee account in India, so they will be treated as a resident only. So, those foreign nationals who are coming to India for employment, they can open resident rupee account and credit their income to this particular account. Again, repatriation of funds allowed at the time of departure, provided the funds to be repatriated outside India were received from abroad, or they are repatriable in nature or permissible under FEMA. In order to facilitate such foreign nationals to collect their pending dues in, so what happens is that, say for example, after having stayed in India for so many years, if they want to go back to their home country, then they will need to inform their bankers, and then their bankers will close this particular account and allow them to redesignate this particular account as NRO account. We will see this. So,
so this is for expats?
Those who are residing in India for a longer time. In order to facilitate such foreign nationals to collect their pending dues in India, AD banks may permit foreign nationals to redesignate their resident account in India as NRO account on leaving the country after their employment to enable them to receive their pending bona fide dues. Now, this is where we will be able to discuss all these repatriation facilities and remittance facilities. Now friends, again let us start with the regulatory framework. The relevant notification is notification 13 of 3rd May 2000. Again, this particular notification has undergone several amendments. Now I was talking about the definition of remittance of assets. You had a question. So now let us see the definition of remittance of asset. Regulation 2.4 of Notification 13/2000 defines remittance of asset as remittance outside India of funds representing deposit with a bank, or a firm or a company, provident fund balance, superannuation benefits, amount of claim or maturity proceeds of insurance policy, sales proceeds of shared securities, immutable properties, or for that matter any assets. Now coming back, so basically, as an NRI, I may have accumulated certain assets in India on which I may be earning certain current income. So the rule which we discussed little back is that whatever current income which I generate on whatever assets I have created in India, that is fully repatriable. You can take it back. However, for remittance of assets, there are certain conditions. So,
I was in India for an earlier period, and I have purchased a property here out of the income generated in India.
Yeah.
Later on, I went across and became an NRI. Now I sold that property in India and again bought a new property. Later on, again sold that other property. Whether the same is also covered here?
see, the rule is very simple. If you have bought the property in rupees, then you cannot repatriate it unless you are repatriating it under $1 million.
Is it covered under $1 million?
Yeah. So the rule is quite simple. If you have bought the property or any assets in India out of repatriable funds, you can take it back. However, there are certain departures for immovable property or residential property which we will see. Otherwise, the rule is very simple.
This acceptance of deposit on repatriable is discontinued in April 2004.
That is the previous slide you mentioned about the acceptance of deposit with the repatriation.
I guess they are accepting.
No, this the publication says the acceptance of deposit on repatriation basis was permitted up to 24 April 2004. If such deposits were accepted, this can be renewed. So, though fresh acceptance of deposit with the repatriation benefit for companies, the NCD route, and that too with the public listed company, the NCD route is the only option.
So far as I will need to check that, but so far as I am aware,
Yeah.
these are accepted by the company. Now, remittance of assets, like I mentioned, it depends upon the assets arising out of repatriable funds or non-repatriable funds. $1 million scheme, remittance. So for example, like I mentioned before, if you have accumulated the assets from rupee funds, then the rule is that, the general rule is that you cannot repatriate. However, there is a small window given to non-resident Indians to take the funds under $1 million scheme. So say for example, if you have sold your property or if you have liquidated certain assets and credited the funds to NRO account, so from NRO account you can take back $1 million per year to your home country. However, if you have bought the assets from repatriable funds, there is no problem. Again, you can make remittance, direct remittance, remittance through NRO account, NRE account. Now,
In your earlier question, this is the capital gain on the sale of immovable properties. Can I take the entire capital gain?
no, you have to pay taxes and then.
No.
See, I am coming to that. See.
Let's say capital gain because of the income I get.
This aspect has been dealt with in a particular slide. If you, in the evening you have got a session on immovable property, right?
Right.
So this particular aspect has been dealt with in that. So I would not like to dwell upon it because then I will be encroaching upon it. But there is a particular slide on that in the next session. Like for remittance of residential property purchased out of foreign exchange, repatriation is allowed only to the extent of 2 such properties. So again, general rule is that if you have got property from repatriable funds, you can take it back. However, for this residential properties, the rule is that you can repatriate only to the extent of sale of 2 residential properties. Again, there is a sub-rule in the sense that, say for example, if I have remitted $100,000 from USA, so I can only repatriate to the extent of my original investment. So it means that I cannot take away the profits.
One more question is the property which was not a need.
It was not?
It was just a right, and we like the Khaveri system. So the proceeds were received out of that. What about that?
So it is a capital gain.
The capital gain is repatriated.
See, it is an asset. If it is not an immovable property, then it is an asset. Then you can take it under $1 million. See, the rule is very simple. If you have brought in, if you have bought any property from repatriable funds, you can take it away. However, only for this residential properties there is a restriction.
Sir.
So the property is under right basis, na? How can you calculate the property itself?
So you have not paid anything, no, for that.
You are not paid anything.
So how
That's
can
a
you take
right
back
to use the
anything?
property.
So then you will have to credit the funds to another account.
Sir, coming back to the same question. Yeah. The same question which I had asked you earlier. If I purchase from NRE account, then how much I can remit back? If you say dollars, then whatever investment I have invested, it will always be within the limit because of the exchange risk.
See, say for example,
But the regulation says foreign currency equivalent. So there is
equivalent. So say for example, at the time of making payments for buying residential property from NRE account, so they will calculate what were the equivalent dollars at that particular time.
Sir, I am investing dollars and putting it through NRE. So I will transfer that into rupees and then invest here. So if I have to take back, whether I can take back in dollars or rupees, because dollars will always be less with the amount of investment.
No, you can get it to NRE account and then you can repatriate the
I
funds.
can credit the entire amount.
You can credit the entire amount to NRE account. However, for repatriation purposes, you can take back only to the extent of whatever you had originally invested in that
That
particular.
is what I am trying to say. If I invest 100,000 rands as dollars from the NRE, my investment as of date, if I sell the property, will always be less because of the exchange.
Yeah.
So I can take the entire dollars.
You go by dollar or rupee?
Would you go by dollar or rupee?
Dollar.
Sir,
At that point of time.
So then, in 2005 the exchange rate was 45. Yeah, it is 62. So then practically it can happen. However, the thing is that the rule is that you cannot take back more than what you invested. That is as simple as this is foreign
that.
currency.
In terms of dollars.
This is
In terms of foreign currency.
So it is foreign currency equivalent.
Oh, yeah.
So, you said that originally paid, right? So if I've acquired some property by way of inheritance and I'm a non-resident, I have an NRO account, when I will sell that property, the sales proceeds will get credited to my
NRO account.
But because I have not actually paid anything for acquiring that property, how will I take back that amount?
No, say, so then in that case, you will be crediting your funds to NRO account, right?
Right.
Right, and from that you can take away the funds to the extent of under $1 million.
But then when it is said over here to the extent of amount originally paid, that will not
But then in
apply.
that case, you would not have paid anything, you know?
Right.
So you can only take away the funds from $1 million scheme only. So then the restrictions of two properties will not apply. See, in the evening when you will have your session on immovable property, there is a particular slide and you will be discussing this aspect.
Okay. But what you are trying to say is that will be other than these two immovable properties and
Then,
maximum
say for example, I have
$1
sold
million.
3 properties. Say
Yeah,
for
then
example,
it will be maximum $1 million per year
then
irrespective.
for the third property, you will have to credit to the NRO account and then you can repay. Again, if you have bought the property from loan funds, then you are allowed to take back the funds on a repatriation route, provided you had made the loan payments from NRE account or FCNR account or for basically for direct revenues.
So that two properties which you have mentioned, that only to the extent of that is in a particular year, or it's
There is a confusion. There is a confusion. It does not. It says only to the extent of two properties. It does not say whether in a year or a lifetime. It does not say anything.
Lifetime.
So basically, so basically, it is meant for lifetime only. However, there are certain interpretations which say that it is for a year. But in my opinion, it is for a lifetime.
okay. So that means NRI can invest during his lifetime only in two.
You can invest in n number of properties. However, you cannot take back the.
But then there is no record.
Yes.
They are keeping this value is happening a year,
So
right?
third, fourth,
1 million is in a year.
under $1 million.
Every year they don't have any
April to March. Financial. Financial.
It is not 12 months.
No, it is not calendar. It is financial.
So March
It is financial.
So for commercial property, it could be X number of the, because if this restriction applies to residential property, assuming that there are no restrictions on investment into commercial property by non-resident Indian. So how to go about selling of commercial property? Would you consider, or is there any cap, or is there any
See,
restriction?
basically, if we see the regulation, they say residential property.
Yes, yes.
So they do not talk about commercial property. So if I go strictly as per this, then the restriction applies only to residential
Okay,
property.
okay.
Again, remittance facilities to non-resident. Remittance of assets by foreign national of non-Indian origin who has come to India, who is retired from employment in India, or assets acquired out of inheritance. Again, he can take back the funds subject to $1 million scheme and balance can be credited to NRO account. Again, this repatriation of immovable property facility is not available to certain citizens like citizen of Pakistan, Bangladesh, Sri Lanka, China, Afghanistan, Nepal and Bhutan for strategic reasons. See, basically, right,
Excuse me, but we have a separate session for immovable
basically I am
properties.
getting so many queries on you. I am deliberately refraining from answering these questions because you have got a separate session on that and there are slides on it. I have seen those slides.
And that is today itself.
Yeah. Mr. Network Thakra is going to take that session. So again, foreign national who are on deputation in India or an employee of a foreign company can open, hold and maintain foreign currency account with a bank outside India and receive and remit the entire salary. So say for example, a foreign national who is coming to India on deputation for a particular project or for a particular work. So FEMA allows him to maintain a foreign currency account in his home country because RBI or FEMA cannot control him to have account over there. I mean, RBI cannot restrict him to not to open account in his home country. So whatever earnings he earns or whatever salary he gets, he can credit directly to that particular foreign account in his home country, and he need not credit this particular funds to his account in India.
So in this case, we just had a practical case on this night. The foreign national who has been working, the foreign national who was working here, okay, he had his account and his salary and everything got remitted to that resident account what he held here. Okay, and then he could have taken it overseas.
At the time of his departure.
Yeah. Now what has happened is that he has passed away. Okay, the joint holder is his wife. Okay, and now when she has to take back the fund, obviously she's going back and she'll be a NRI now. She'll be settling where she was from. So how do we go about that? Now will this count as inheritance fund and she'll have to take it as 1 million USD? Then another question, if I have to go on that head, in the specified list of the Form 15 CACD, I think there's a point number 21, the serial number 21, which talks about close maintenance of for the relatives and savings funds can be taken across overseas without the Form 15 CACD requirement. So can that be considered?
See, basically you are right in the sense that there is a particular mention about this in Form 15 CACB. However, the bankers from practical perspective, they are asking for 15 CACB. Even as a chartered accountant, we are sure that 15 CACB is not required still. Because of the client, we have to certify these forms and give it to them so that they can repatriate the funds. Otherwise, strictly.
Yeah, but for these transactions, how do we even go about it? Because what has happened is CBDT has come out with a circular saying that these specified lists will not require 15 CACB. But when we approached RBI, just oral confirmation, they are saying that you all will have to obtain those forms. So, I mean,
see, in those cases, we'll have to be practical and be helpful to the person who wants the remittance. Basically, then we'll have to go as per his wish. Because the bankers will not allow unless they see. Basically, for them, the sacrosanct document is 15 CACB. So unless they see it, they will not allow them.
Yeah, the thing is, bankers are doing it that way. But the problem is the second holder, the wife, does not have a PAN card. So again, then we are stuck.
So she will have to.
Yeah.
So these are all practical problems. They will have to be sorted out in practical way only. Then we cannot see the book and then say that this is not allowed.
Yeah, the bankers are not exactly.
So we need to be practical as well.
Yeah. Thank you.
Again, since FEMA has been very generous about Indian students who are going abroad. Now, typically what happens is that whenever an Indian student goes abroad, he may have to he may require foreign currency on two counts. One is for his tuition fees, which he has to remit to foreign university, and another for his living or maintenance expenses abroad. Now, under FEMA, you can remit up to $1 lakh per academic year tuition fees to foreign university. Again, if the estimate given by the foreign university is higher, then you can take away the higher amount. So this limit is quite generous also. And again, if you require more funds, your close family members can remit $75,000 from LRS. Still, because under FEMA, the rule is that if a student goes abroad, then he is treated as non-resident. So his account in India will have to be redesignated as NRO account, and from there he can repatriate up to $1 million. So if he requires some more funds, he can always take back from NRO account under $1 million. So he can get funds either by way of direct remittance for tuition fees, which is 1 lakh, or for from LRS or from NRO account under $1 million scheme. Further, he can also carry, while he is going abroad, he can also carry some hard cash and traveler's checks within the limit prescribed under current account rules, like say $10,000 or so.
LRS is available to non-resident students?
No, LRS is not available to non-resident, but his family members will be able to remit from LRS. See, LRS is only for residents, but his family or the parents will be able to remit from LRS. Okay, again, I understand that you didn't have session on LRS, or I think you will be having. Okay. Again, for those, now let us see the other way around. Now, those students who are coming, foreign students coming to India. Now, those foreign students who are coming to India for learning, they can open a resident account, rupee account, and at the time of their departure, they can close this account and take back the funds. So now, what are the funds which could have got credited to this particular account? So remittance allowed in respect of foreign students leaving India after completion of their study, training in India, provided balance in the bank account represents inward remittance, sale of foreign exchange, stipend which they may be earning in India, scholarship from government. So they can close the account while leaving and take the funds. Now friends, after having seen deposits for non-residents, repatriation facilities available to non-residents, now let us see what are the bank accounts which a resident can open either in India or abroad. Again, let us start with the statutory framework. Section 9B of FEMA allows holding, operating of foreign currency account by such person or classes of person. So, authority has been given to RBI to allow resident Indians to open accounts either in India or in foreign country. Under that, RBI has issued notification number 10 of 2000. Again, this notification has undergone several changes. Again, what is the definition of foreign currency account? Now, foreign currency account means an account held or maintained in currency other than the currency of India, Nepal or Bhutan. Now, this particular notification starts with a general prohibition that there is a restriction on holding foreign currency account by a person resident in India except as provided in the framework of the regulation. Now, like I mentioned before, again you are allowed to open foreign currency account either in India or abroad. So let us see what are those accounts. EFC account, which is known as exchange earners foreign currency account, EFC account, resident foreign currency account, RFC account, RFC domestic account, and there are certain accounts by shipping or airline company incorporated in India. So for practical reasons, they are allowed to open foreign currency accounts in India so that they can collect the freight and make the local payments and then they can repatriate the funds. Now, project offices are also allowed to open foreign currency account in India. Let us start with the first account, which is EFC account. Now, basically, this account is for exchange earners. So basically, those who are exporters of goods and services, they receive their remittances in foreign currency. So they are allowed to open this particular account. Now, again, this account is in the form of a current account. You don't get any interest on this particular account. However, you can park your foreign currencies in this particular account. So you have the option of either opening this account in USD or particular foreign currency you are mostly dealing in. Again, this account is allowed to be opened by individuals, companies, partnership firms who are resident in India. Like I mentioned, EFC account can be opened only in form of current account. No, you don't get any credit facilities against the security of EFC account. SEZ units cannot open EFC account. However, they can under the SEZ policy they can open foreign currency account. So they cannot open this particular account. Again, if you are an individual, you are allowed to have joint account holder facility. However, the account will be termed as former or survivor. So resident individuals are permitted to include resident close relatives as joint holder in their EFC account on former or survivor basis. However, resident Indian close relatives shall not be eligible to operate the account during the lifetime of the resident account holder. Now, what are the permitted credits? What are the funds which I can credit to this particular account? I can credit inward remittances, so export proceeds I can credit. However, I cannot credit any loans which I have got from foreign country or in foreign currency. Payment received in foreign exchange by 100% export oriented units in export processing zone, software technology park. Again, I can also receive advance remittances from my foreign importers. And friends, this is very interesting. If you see, you can also credit your professional earnings, including director's fees, consultancy fees, lecture fees, honorarium, and similar other earnings received by a professional. So I don't know how many professionals are using this particular route for creating their foreign earnings. Again, if you are dealing mainly in foreign clients, then only you would like to go for this particular account. Now let us see what are the uses I can put this account to. I can make any permissible payment allowed under FEMA, under current account or capital account scheme. I can make payment to export-oriented unit, export processing zone units, software STP units, payment of customs duty. Now this is interesting. I don't know. I mean, generally we tend to think that you can make the payment of customs duty in rupees, but payment of customs duty is also allowed from this EBFC account. I don't know how practically people are making payment from this particular account. Now this is another interesting account. This, see, the first account we saw was for business people. Now this account is for individuals. Now, as a non-resident, I had in India my NRE account or FCNR account. Now I come back to India. So this account is basically for returning Indians who had their accounts, NRE accounts or FCNR account in India, and at the time of their arrival in India, now they want to redesignate this account as RFC account, basically. So returning NRIs, PIOs may open, hold and maintain in India a resident foreign currency account to transfer balances held in NRE, FCNR account. Again, so say for example, again I have sold certain assets which I had accumulated in a foreign country, so I can credit the sales proceeds of those assets to this particular account. The funds in RFC account are free from all restrictions regarding utilization of foreign currency balances, including any restrictions on investment in any form outside India. So since this is my foreign currency, I can use it for any purpose I may want. I may invest in immovable properties outside India, or I can do anything I want. I can invest in shares listed in stock exchanges outside India. I can do whatever I want from this particular account.
There is no time period.
However, recently I checked up with one bankers and they told me that after 7 years they want this account to be closed. Again, this particular account is allowed to be maintained in savings account, FD account. Again, joint holder facilities available. RFC accounts are permitted to be held jointly with resident close relatives. Is defined in Companies Act 1956. So now we'll have to take the definition from Companies Act 2013. Again, the account, if you have a resident joint order, then the account will be in former or survivor basis. Again, interest on RFC account is not taxable during RNOR state, during the years of RNOR.
That is the reason why they are telling.
Yeah. Now there is a small window given to, see basically we discussed RFC account, resident foreign currency account. However, there is a slight variant of this particular account which is resident foreign currency domestic account. Now this is for basically resident Indians who have got, say for example, they had gone abroad on a foreign trip, they have got certain foreign exchange available with them which is unspent, they can credit to this particular account. So let us see what are the credits to this particular account. Any person resident in India can open with a bank in India foreign currency account, which is known as RFC domestic account. Out of foreign exchange acquired in the form of currency notes, bank notes, travelers checks, so they can again redeposit travelers checks. While on a visit to any place outside India, while on a visit to any place outside India by way of payment for services not arising for any business or anything done in India, or from any other person not resident in India who is on a visit. So say for example, if a non-resident Indian close relative comes to India